Canada's Big Five banks: Royal Bank of Canada (RBC), Toronto Dominion Bank (TD), Bank of Nova Scotia (Scotiabank), Bank of Montreal (BMO), and Canadian Imperial Bank of Commerce (CIBC) have long been considered pillars of economic stability. However, recent developments have presented significant challenges that warrant closer examination. In the latest financial quarter, RBC, TD, and CIBC reported profits exceeding analysts' expectations, primarily due to robust performances in wealth management and capital markets. Despite these positive figures, a cautious stance prevails within these institutions. Both RBC and TD have increased provisions for potential loan losses, reflecting concerns over escalating tariff disputes and broader economic uncertainties. Reuters' Canadian real estate market, once a consistent growth engine, is now facing headwinds. In February, home sales experienced a 9.8% decline compared to January, marking the most substantial drop since May 2022. This downturn is largely attributed to economic uncertainties stemming from ongoing trade tensions, which have made potential buyers hesitant. The Canadian Real Estate Association notes that this climate of uncertainty is causing many to reconsider significant financial decisions. Reuters' imposition of tariffs has further complicated Canada's economic landscape. The recent trade war initiated by former President Donald Trump, which included a 25% tariff on all Canadian and Mexican goods, has led to a 5% decline in Canada's main stock market index, the S&P/TSX Composite, since January 31st. This decline has been felt across various sectors, with financials down 8.6%, industrials 7.4%, and energy 5.4%. These developments have raised concerns about potential impacts on growth, investment, and employment within Canada. AP News. The convergence of these factors has sparked discussions about a potential housing market crash. Analysts are closely monitoring the situation, particularly in light of the upcoming mortgage renewals that could place additional financial strain on homeowners. While some experts predict a market correction, others believe that strong underlying demand and limited housing supply may prevent a full-scale crash. Newsweek. In response to these challenges, the CEOs of Canada's major banks are advocating for policy reforms. They are urging the federal government to eliminate internal trade barriers, reassess tax policies, and streamline regulations to mitigate the risks associated with current trade tensions. These leaders emphasize that such reforms are crucial to bolster the economy and maintain the stability of the financial system amid these uncertain times. Reuters. In summary, Canada's Big Five banks are navigating a complex environment marked by financial uncertainties, real estate market fluctuations, tariff-induced economic pressures, and the looming threat of a housing downturn. The strategies they adopt in response to these challenges will significantly influence Canada's economic trajectory in the coming years.